open up here with a comment from Greg in Portland. All I got to say is respect, and I got to say it before the next 1% drop in my portfolio has me doubting. And I love that because that's exactly what happens emotionally, right? And honestly, I'm going to give Keith a compliment. But so I decided I wanted to allocate to get my bonus or distribution or whatever. I want to allocate a certain amount to crypto.
Okay, cool. So
I did that. For me, it's sort of a longer term holding. But then, immediately after I do that, of course, it starts to sell off. And historically, I would have just said, I'm getting out of this, right? It's like because you have those emotions. But then you have a tool like the risk range on crypto now, so you can say, okay, I'm going to stick to this process, and that's exactly what happened with crypto. It sort of hit the low end of the risk range a couple times, but didn't kind of breach it. And I think these feelings people have are real. That's why you need a quantitative process around it to sort of stop yourself out from making bad decisions at inopportune times. So.
Yes, stopping yourself out when something changes is really important. And when nothing changes, like the way you ask the question might change, but it doesn't change the answer. The answer is you buy it at the low end of the range, you sell it at the top end of the range. It's the most basic thing. Like think about I'm not weaponized with like this super high SAT score. Again, lowest SAT score at Yale. How I got in, I don't know. I think I know. But the reality is that, I have relegated myself to the point of my thinking about anything beyond what the machine's telling me to think, the numbers, is a really dangerous thing. Like it's really bad. Like if I were influenced by one of my analysts to short one of their higher short interest ideas, that could have been a big reputational problem because then I would have been sitting here with like 25, 50, 80% stop outs on shorts. Yeah. Instead, no, because I let the machine tell me what to do. So I'd encourage you, don't forget Jonesy Buds and I are just two Canadian brawlers who are just trying to communicate, trying to be better coaches, trying to help you do better. The North Star that we provided with the quads and the signals, those two things, the signals leading the quads, doesn't exist anywhere else, okay? So I'd encourage you to encourage the people that don't have a process, that are speculating, gambling, whatever, to just get one. They've made a shitload of money. They've earned the opportunity, all right? Give them a chance. Give them a chance. This is America, right? People can come up. There are a lot of people in this world that would love to make more and more money by learning how to do it like a pro does instead of whining like a baby does, okay? So let's do that this weekend. Having regret really has to do with a bunch of Reddit people telling you you're a dumbass, right? Like, once it's obvious that you screwed up, it's one thing to have me and Jonesy Bud say you should have known better at quad 2. It's entirely another thing for all the dumbasses to tell you you're the dumbass, right? That's really painful. We even saw some really famous people in our business get triggered on that yesterday. It is what it is.
But, by the way, I was thinking about this last night. Because we do the factor table every day, right? To not be short, heavily shorted stocks, the factors have been telling us that for 3 months, right? So,
yep.
It kind of came home to roost in GameStop, AMC, and others. But this is not new news, right? It's something that had your quant team been watching it.
100%.
You'd seen this percolating.
And it's the particular thing that matters. And again, not everyone looks at everything and then notices the particular things. So it's the particular thing that matters at a particular time. So as you can see there on high short interest, the return on a 1 month basis is up 5 versus down a half if you're long the high quality compounders. We got a lot of high quality. Some of it didn't work. But on a 3 month basis, you're up 33.6% just being long high short interest. So again, you knew this, of course. That's easier for people to maybe have some reflection on their process. If you didn't know that, now you know. If you start with your stock picks instead of the macro environment, now you should and can do better. But imagine Reddit started to explain to people factor exposures, asset allocation, sector styles, and factor exposures within the lens of price, volume, and volatility. Oh my. And by the way, I champion you Reddit people. Subscribe to Hedgeye. We'll educate you on how to really antagonize people with real information, data, okay? Just imagine, look how powerful they'd be if they all used the Hedgeye process. Woo! And we do have a lot of them that are saluting us this morning, so thank you for that. I appreciate it. Record audience here, which is totally cool. We're humbled by that, and thanks for joining us.